Hello everyone. Today we'll start with net operating losses or credits in TRCS. So we'll start with first understanding what is net operating losses, how does it help in TRCS, means what is the purpose of NOL and how do we use it in TRCS. Okay, so let's get started. NOL automation will use net operating losses as NOL. Okay, so NOL automation is used to configure the rules to automate the process of deferring the current year tax losses and utilizing and expiring the tax losses and credits carry forward. That means whatever losses are there in the current year, NOL will helps to utilize that in the current year or to defer that in the next year, or you can expire that also by clicking on that expiry rule or the expiry logic, and either you can utilize, defer or expire the net operating losses in the next year, and it totally depends upon you how much percentage you want to do it in the next year. Okay, so tax losses are incurred when the total of the taxable income or the taxable income after loss in the current period is less than 0. Okay, so basically, yeah, this is just the general information that losses are incurred when your income is less than 0. That means it's in negative. So tax losses incurred in the current period, it can be deferred so that they can be utilized in the future period or years. All right, so like in the current year you have the loss, you do not have to pay the tax, and in the next year if you have some taxable income, you can utilize the last year loss and you can basically defer it or the carry forward to the next year, and you can utilize it with your whatever income you have incurred in the next year. Okay, so when the total of the taxable income in the current period results in positive amount, tax losses originating in the prior years can be utilized. Deferred losses or the losses originating in the prior periods or years can be utilized either fully or partially in the current period. Carry forward losses can be assigned a year of expiration or no expiration by default if nothing is entered. Okay, so you can assign maybe what is the year of expiry or no expiry by default if you do not enter anything there in the expiry logic or the expiry block. The tax losses or credits expiring in the current year can be automatically written off. All right, you note that the NOL automation supports parent tax calculation entities only when the tax losses and credits are accounted for on the parent tax calculation enabled entity. So then whatever NOL automation, it supports the parent tax calculation entities only. So whenever you enter the tax losses and credits, they are accounted on the parent tax calculation enabled entity. The point to be noted is net operating loss automation rule applies to both the national and the regional tax calculation. All right. Now it says how to manage the NOL automation rules. So the NOL automation screen, it enables you to configure the rules defining how the system should automatically defer, utilize or expire tax losses and book the corresponding offsets amount. The following NOL automation rules apply. First, can automatically expire deferred losses whose year of expiration has passed. Is accessible from the configurations card. It shows the base level descendants of the tax losses CFS total and the tax credit total parent account, which has both loss and credit accounts. When a utilization flag is checked only, then its dependent columns are enabled, like utilization limit taxable income. So the parent and amount is given the highest precedence over the carry forward columns. If both the percent and the amount are present, then the amount has more precedence over the percent. All right. So if you enter the percentage also and the amount also, amount will supersede the percentage. a utilization limit, carry forward percent and amount. Only if there is nothing mentioned in the taxable income, then these values will be considered. If both percent and the amount are present, then amount has more precedence over the percent. Okay, so as we discussed, amount supersede over the percent. Now, how to do this? To define the annual net operating loss or credit rule, you must have an administrator or the power user security rights. Now, to define the annual automation rule, from the home page you need to navigate to the application, then you need to select the configuration under application. You need to use the NOL automation configuration item to define your automation rule. By default, each item will have some rule defined. To add the additional rule, you need to click on the action menu and then add rule. Here the system will insert a new row in which you can define your rule. Then you need to select the target account from the pre-populated list of base level descendants of the tax losses CFS total account and the tax credit total account. You can select one or more calculation methods, either deferral, utilization or the expiration. Enter the entities to which to apply the calculation or enter the excluded entities to define the entities to be excluded. After you define an annual automation rule, you must run the consolidation to capture its effect. Now, when the taxable income and the special deductions, that is the taxable income before loss plus some tax special deduction, results in a negative amount, you must define a rule to defer loss so that it can be utilized in a future period. Optimal loss deferral will result in taxable income by zero by deferring a loss equivalent to the sum of taxable income and special deductions plus any amounts manually entered in the tax loss carry forward account. If a company incurs a loss, that is, taxable income after loss is less than zero, then this loss can be carried forward so that it can be utilized in future period. Now, depending on the deferral percentage specified in the annual automation, the automated of the carry forward account is populated using the formula, that is the taxable income before loss into deferral percentage into -1. Okay. Now, if you want to define the utilization rule, you need to define a utilization rule for the carry forward account where the losses are available for utilization. So, multiple carry forward accounts can also be used for utilization. Note that the utilization priority is mandatory to be specified. Priority starts with number 1 and goes incrementally in case of multiple accounts. Okay, then you have to save the rule. Note, there are two criteria for the utilization process. Entity must have the positive income. Entity must have the losses available to utilize. Oh, obviously, if you have the income and you have the losses, then only you will be able to utilize in the next year. If the entity has a positive income and it has losses available to utilize the positive amount, then only the utilization automated process will be started. Some utilization process applies only to the regional loss or the credit accounts too. Now we'll see how this will work. And if you talk about the expiring tax losses, so when you set an expiration rule for an account, the available amount in the carry forward account, it will be offset automatically for the current year and the below years. Automatic expiration takes place only when the consolidating last period of the financial year, that is the P12. Automatic expiration takes place after the automatic deferral or the utilization for the current entity, scenario, year and period has completed. You can set up rules for the system to automatically expire losses that will no longer be available for utilization after the current period. Now the tax losses form, it will show the expired losses in the expiration automated. The temporary difference form will show you the expired amount for each carry forward account under the other adjustments column for the current period, current year and the period. Now the expiration logic basically aims to expire all the available amounts that have a year of expiration that is less than or equal to the current year for the specified account. Losses whose year of expiration is the current year will only be expired in the last period, that is a P12. It cannot expire in the P11, 10, It will be expired at the year end, the last month of the year. Now we'll see how to utilize or to defer this NOL, that is a net operating losses, in the application. Under configuration, we have the NOL automation. Okay, I'll start with you, like NOL automation. So here it is scenario, year and period, like for which scenario, which year and period are you using this NOL automation. In this form, it has a tax losses account, that is carry forward automated. Here it is NOL rule 1. So logic, 3 logics you can give it. Either you can defer it, you can utilize your losses, or you can expire it. So you have to check your boxes. And then entities, if you want to include some entities or exclude some entity, then you have the jurisdiction, if you want to include it or exclude it. Deferral limit, you have to define here the deferral percentages, or when you will select, it will automatically define if you want to utilize it 100%, 50%, or below it or above it. Similarly, you need to define the utilization limit as well. That is, here you can utilize, you can define the utilization limit in percentage also, in amount also, and as we saw, the amount will override the percentage. Similarly, utilization limit, if you want to do the carry forward, you need to define both the things. Then you have to define the priority. All right, now we'll see our the current provision. We'll open the current provision and we'll check what is, if there's an income or the loss. Alright, so scenario is actual, year is FY21, period is P12, entity is operations USD, that is LE101, consolidation, it is entity total, jurisdiction is US domicile, multi-gap as local gap, currency is entity currency, and here you have automated adjustment and total as your movements. Now if you see, I have already mentioned my taxable income. Now if I run the rule of consolidate, let me check if I have some numbers for FY22 or not. Okay, so in FY22, if you see, our taxable income is positive. Here if you see in FY22, we have the positive 33,792. So for entering the losses, I'll enter some loss amount so that I get the loss in the current year and I'll use it, or we can see how NOL will work. Excuse me. excuse me, I'll enter adjustment of the whatever is my income, that is I was, so that I can get a loss. I'll enter 29824 279 or 80. I'm just trying to explain you how we can get to the loss of the current year so that we can proceed. Okay, so my taxable income here it is 29824 279. Let me run the rule for FY22 P12. I'm trying to copy the ownership percentage because my rule is not running. So FY21. Okay, in FY21 I have this, and in FY22 if you check, no ownership data in the current year. That's why I'm getting the error to run the consolidation. So I'll go back to FY21 and we'll copy the ownership structure to next year. Okay, now I'll come back to the main screen and we'll run the consolidation for FY22. Okay, so we need to consolidate FY21 first and then this. Alright. sorry, if you look at FY21 also, after running the consolidation, that works. That means I'll show you in FY21 as well the losses which I am getting. It is still processing. As I was talking about FY21, so if you look at this taxable income or FY21, we have this 33,197,392 as income, and this is the adjustment. So finally we are getting the loss as 9,530,107 as my loss as my loss for the current year, that is FY21, and this needs to be carry forwarded to the next year, and we want to utilize it, right? So for that you need to go to the NOL automation. Here under tax losses, that is carry forward automation, I want to defer it. Even I want to utilize my loss, and automatically here it come, if you want to defer 100%, utilize 100%, yes. Utilization limit is 100%. Then my priority is one force number, and I'll save this. After saving, you need to run the business rule for FY21 period. as we have already done, but after defining the rule we need to run it. So here if you still see, once this loss, that is 9530107, when the rule is run, this loss will be you will be seeing that loss in the tax losses carry forward automated. Now we need to run the rule for FY21 again. Okay, this is completed. Now if you refresh this, you can see now my taxable income which was my taxable in loss, which was taxable income after deduction of the adjustment, so my loss was 9530107. now that has become 0 as we have utilized, we are carrying forward. Now my taxable income is 0 and the losses we are showing it over here, that is tax losses carry forward automated. Now this loss will be carried forward in the next year and will be utilized in the next year as well. So now we'll move to FY22 and P12. So this has already been given, deferral, utilization 100%, priority as 1 as save. Now we'll move to the current provision FY22. So here is 95,30,000. Now here the 30 lakh which I had entered, anyway still I'm getting the taxable income as 30987329. And I'm getting nothing at the total national losses, total national tax losses or the carry forwards. I'll run the rule for FY22 P12. So basically in the last year we gave the logics of referral and utilization, and we saw that the losses were, the income becomes 0, that is and the losses posted to the carry forward account. And now in the next year again we give that and we are running the consolidation, and whatever income is there, then the losses will be adjusted from that particular income. The remaining will be our taxable income, which is which will be chargeable for income tax. So basically this is the logic of this NOL, net operation losses. We need to wait as it is taking some time. Still processing. Okay, it is completed now, and we'll refresh it. So if you see 95,30,000, which was my carry forward loss from the last year, that is the loss of the last year, it has been carry forward in the current year, that is FY22. Tax losses carry forward, so this now that will be deducted from our net taxable income. And now you will be paying tax on this one, that is 21,457,222. So I had said I have to 100% utilize it, so I'll utilize 100% from this amount, that is my deductible income tax is this much. So this is my net income, that is 303,99,104. This is my net income before tax. This is my permanent differences. These are my total temporary differences, so we'll deduct from these two. After all the deduction, now my deductible income tax is -52,62,451. Now taxable income before losses 309,87,329, and out of it, now this is my taxable income. Out of this I am deducting carry forward losses of the last, which is carry forward from the last year. Then we'll reach till 21,457,222 as my taxable income. So 30987 is my taxable income before loss. These are my tax losses which I am deducting it from this year, and so we'll reach till 21,457. On it we'll be paying the 21% current year tax rate, and this will be my current tax on taxable income. So in this way you can carry forward your net operating losses to the next year. You can utilize that either 100% or 50% or whatever percentage you want to utilize that loss. It can be utilized even depending on the accounting standards or the laws as per your country. It can be utilized in 8 years or 5 years, so according to the laws available or the provided or the guidelines provided by the accounting standards. but in TRCS we can provide some logics and do this kind of NOL automation. Okay, so thank you for your time. Today we covered this NOL automation topics. Uh, Now we'll connect again after for the next topic. Thank you for your time. Thank you for being patiently listening to this topic. If you have any doubt, please contact BISP Solutions. Thank you.